Alright everyone, welcome to Friday's Morning Bell with me, Richard here at Ninjacators. I am streaming in 3 different areas today, so hopefully it all runs sweetly. Thanks very much for attending. Last day of the week, and we've already seen some strong bounces on the ES and the NQ. A little bit in gold, and crude oil also finally reached our projected targets after quite a bit of messy price action that we've been experiencing for a while. Anyway, I'll look at those markets in just a second. Just a quick glance at today's economic calendar. Not really much happening. Some impact news events out of Canada. I think everything, or let's say all traders, will probably be looking forward to next week's CPI numbers. All right, the inflation report. So this, in my opinion, obviously going to be another volatile period. Everything, like I said previously, or as we all know now, to do with inflation really causes strong reversals or trend continuations or whatever the case might be. So this will be really telling to see if we can see these strong bull runs that we're seeing currently. Won't say strong bull runs, but yeah, it's only been lasting for 2 days, and today we've been moving up as well. So we'll see if that can continue. But anyway, we'll look at those levels in just a sec. So I think next week's CPI numbers from the economic perspective is the figures we need to look out for. Right, as always guys, we do have a chat box there, so if you've got anything you would like to ask me during the presentation, then please do so, and I'll be more than happy to answer those questions for you. Alright, as always, we're going to look at the ES, the NQ, crude oil and gold, and then we'll finish off today's session. If you're new to this channel, then you'll probably see that I've got a lot of lines on my charts. Now these lines are market geometry lines. I love to use pitchforks, channels, and frame the markets during whether I think there's day correcting or whether new bull runs are starting, and try to figure out areas where we got confluence between multiple market geometry lines running at different angles, and that's typically how we'll determine areas where markets generally can be drawn towards. And it also depends on what time frame you're looking at. I normally look at the daily, then drill down into the 4-hour chart. We'll also look a little bit at volume profile and all that, but just a quick recap of what we've been looking at on the ES for quite some time is this pitchfork that we drew using the 3 most prominent anchor points prior to this decline that started in Jan this year, obviously now on the ES, right? Now this is a standard pitchfork, these green lines we have over here, and let me just get rid of this. You'll see these little arrows here. Now we created a box over there, which was a little area where there was a confluence between multiple market geometry lines. Price pulled right into it, had a bounce upwards, and it stopped again right at the market geometry line again. So it made like a double return, if you can almost say that. Reached it, pulled back to market geometry line, and got rejected down to the downside. All right. Now how I had this zone determined over there, I just had a pitchfork. I love using shift pitchforks, since I was assuming at that stage, prior to price actually reaching that stage, you see this line that we have here. Sloping a shift pitchfork setting in the direction of what I assumed could have been a corrective move, and where we have what we call this lower red warning line, not exactly but very close, and this upward sloping centimeter line of that longer term pitchfork, the green one that I've just shown you on the daily time frame, where it all came together is where price found support, bounced higher, and you even see, even as price moved above this pitchfork that's sloping downward, it respected it a few times, broke above support, over resistance, and reached this upper line over there. So we also had another area of confluence where price pulled into and price got rejected down to the downside. Now, I just quickly want to get rid of that line quick. Then at the stage where we finally start seeing a decline, we thought that we were potentially going to see some sort of a zigzag behavior into this area here. And this area is more than just where previous lows formed. It's actually also a high volume node on the volume profile. as you can see now. This has changed now a little bit because we changed to the December contract. So we rolled over from the September contract to the December contract yesterday already. I know some people are only doing that today perhaps, or maybe even next week. But in any case, on the previous chart, which is now a little bit different, we had that volume node that we thought might support price. We had a little bounce up higher, and I think this was sort of the time when the Jackson Hole Symposium was held and Fed Chair Powell was talking a lot, and bam, markets didn't like it, sliced straight through it, and looks like it's now found support on its way down. Now these levels we have down here, these two horizontal lines, 3,908 and 3,885, plus minus is where we had a support zone as well, and price has bounced from that, although at that stage I wasn't very positive, if you can say that, especially looking at this very strong decline. And the reason why I'm saying that is previously we thought that a correction might have ended here. That could still be the case. If you look at the price structure running up to the upside, control, let me just get rid of the snap mode here, get my labeling tool out. I believed we had a first wave higher, A, B, C for a second wave, and that this was a third wave. Impulsive, beautiful third wave. Typically how impulsive third waves work, we'll have some sort of a retracement, and then a fourth wave, if you're familiar with Elliott wave terms, should not move back into the area of where you have your first wave. And then we assume price might bounce higher from there again, making a beautiful, nice 5-wave sequence to the upside, then expecting a correction, and then a potential another strong move to the upside. Now, we didn't get that 5-wave move to the upside, unfortunately. Well, not a good looking one, at least. There is, however, a possibility, although I don't like it, but it is what it is. Marcus will do what it wants, regardless of if I like it or not. That we had a very short third wave, and a fourth wave, and a fifth wave up here. Meaning that technically wise, from analysis point of view, that this could still have been just an ABC. And now we're going up, either reaching parity with this move to the upside. Let's measure that. Plus minus, using a fib extensions. Meaning that in the bigger picture, this could perhaps have been an A, a B, and let's say something similar to that. That will still be bearish, right? Or this was a 1, now we have a 2. Let me see if I can label that properly for you. Bear with me 1 second. That we had a 1, an ABC for a 2, and now we're going to get some sort of third, fourth, fifth wave to the upside. Now that would be extremely bullish, and if that is the case, price will continue higher and potentially by the end of this year or maybe first quarter of next year break above the all-time highs that was set in Jan. Now, that being said, we also have a bearish alternative count here, and unfortunately, you know, you could probably tell me, like, Richard, you got, obviously the market's either going to go up or down. I 100% understand that, but we can just after what I'll show you now talk a little bit about shorter term projections. But for me, the ES and the NQ for that matter are really in between two areas. This lower area where it bounced higher from, and I also think this was the 61.8 golden ratio retracement. Let me just quickly look at that before I talk about the other stuff. Yeah, pulled right into this 61.8, although a very strong potential correction. I'm saying potential. So how would we know that this was indeed a corrective move? Well, from a bigger picture view is kind of the work that I like doing here. You want to see previous structures broken. You want to see previous levels reached, either respected or depending on what your sort of outlook is. But in any case, let me just get my horizontal line tool out here quick again. I think, and this is obviously still far away, but with the volatility in these markets, they can be reached really quickly. Potentially a break above here, above this previous high. Did I measure that right now? Yeah. On the December contract now, 4,235 and a quarter would probably mean that this is a low. Now, price would have traveled pretty far up by then, but to be dead honest, whether this is an A, a B, let's say this does occur and it breaks above there, generally another leg, majority of cases, not always, will trace out the same distance as your first leg to the upside. Let's say something about that, plus minus. It could really bring us up all the way up here, very high up. Okay, and that will give us enough ample opportunity, in my opinion, to, you know, on the way up, get into shorter term positions and again identify where there might be resistance to the upside. But again, it's difficult to say. I mean, obviously everything is difficult within trading. It's not that easy. But these levels really need to be broken to convince me that this was a corrective move. I still don't like that this could have been a very small 3, 4, and a 5. Although it is definitely possible from a technical analysis perspective. So markets are powering up to the upside. Potentially, we'll see by the end of today if we close nicely up to the upside here. Just quickly before we look at the, let's actually look at the 4 hour right now. You'll see these red lines are bearish divergence lines and the green ones are bullish divergence lines. This is the MACD divergence indicator, the automatic one that we have here at Ninjacators. You know, quite often when you see divergences, they can appear for a very long period of time, but I think they are more significant when they appear at areas where you identified beforehand where prices might reverse from. Also, in my case, looking at confluence of multiple areas. So on the daily, we didn't have divergence down here, and now we've just had a straight move back to the upside. Now, very strong move to the upside. Only a few pullbacks that we've seen yesterday, I think it was it, yeah. So if we look at fib levels, let me just get rid of the divergences quickly. From this previous high over here to this low on, when was this, Wednesday? Then we're very close to 38.2. So that's at 4,070 and a half-ish, right? I didn't use snap mode now, so that's probably where it's at. 4070. Very attainable target. Still, what, $10 away from there, so potentially price will reach that. I think so. It's a really good objective to reach, and I should have actually stayed on the 4 hour chart a little bit, yeah, or on the daily. Let's go back to the daily. I quickly want to show you something else on the volume profile. Just bear with me. Here we go. If we run, where did I run that from? All-time highs to this, which could still be a corrective move. We have this high volume node here. See, it lined up. I showed this previously, actually. I should have talked about this when I was at that stage, but in any case. High volume node over here, but with pointer control all the way up here. We run one from this low to the recent high. Also, high volume area right there. So we sort of bit of in a void here in this profile. So price is accelerating to the upside. So I do think that there's a good chance that forget about that 38.2 retracement I've shown you, that price might pull into the low, at least the lower half, about 4,160 of that volume profile, which was previously also that support area that now could potentially act as resistance. All right. And that brings me back to this previous channel that I had that I deleted at the beginning. I like breaking things up systematically so you guys can understand what it is I'm looking at. Let me just monitor the check boxes quickly. If we run a channel from the high to these highs to this low in June, I'm trying to get it as perfect as possible. Then price also pulled back to the center line of this channel, right within that little zone and at 61.8 retracement. This is I've actually done after the fact, so I can't take any credit for that. I'll be 100% truthful about that. But it's, yes, it's just another, what's his name, confirmation that this might be a very strong low. All right. So bullish for me over the near term, although we might zigzag higher up here. But the stronger this gets, and if it starts breaking these levels, the more evidence I'll have, or the more confidence I'll have that this is actually some sort of corrective end of a move, creating a higher low, and that price could potentially move quite strongly up to the upside. That being said, we also had an alternative count here, and that alternative count would become plausible if price would break these lows. So it's always good to have a plan A. For me, I'm swinging with plan A at the moment, bullish, right? And it's fine going from bullish to bearish, bullish to bearish. And as long as we have these levels, and these levels are important for me because they based on structure, and typically how trends develop, you know, trends break certain structures, or let's say from previous trend, that might mean that a change in trend has happened, or whatever the case might be. Also looking at corrective moves, could have been a very, very, very volatile ABC. So if price breaks below here without breaking up here, and this might actually be a time that we're moving into that window on the 13th of next week when the CPI numbers are released, that we'll see if this market's got what it takes to push through these areas or reverse strongly downwards, like it has quite a few times during these inflation reports. So keep an eye on 13th. Obviously, that's not actually on a Tuesday. It's normally on Wednesdays to bring the CPI numbers out. I don't know if that's got anything to do with Labor Day that was on Monday. But anyways, it looks like it's on Tuesday this time around and not on a Wednesday. So we look again at where prices is on Monday. Like I said, we got a decent chance, I think, of price reaching the 4,116, this area over here. Might be zigzaggy into there, but not much news events today scheduled that could, I think, affect the markets in a more volatile way, if that makes sense. All right, before I look at the NQ, I did mention what's the alternative count here, and then I got sidetracked and talked too much again. Worked under the premise that this could have been also, if this is a correction, that this correction is potentially not over yet, and that we might even move much lower. And I'll swing to this, how can I say, alternative count is probably the best way, a very bearish alternative count if price breaks these recent lows without breaking above these areas too much. That we potentially had an A, expanded flat B, and a C. So A, B, C, I'll label that now. And then we had, you see this area over here, well, actually to this recent high. Similar behavior is what we've seen over here. Price made a low, moved up, a little bit lower, broke that previous lower high, and moved down. Same thing here. Made a low, moved higher, a little bit lower, break this previous lower high, and then start declining. So we might have what we call, almost like in a very bigger picture view, some sort of a fractal repetition of a fractal happening here. So A, B, C, and if you think you're dealing with an A, B, C, and it changes into something else, i.e. more bearish, in let's say bearish scenario, then it could be that this was an X wave and that we're now seeing the start of another sort of move like this to the downside. And how you would label that, I don't have that on this tool, would be an A, expanded flat, B, and a C. Basically two ABCs after each other, with this one being the secondary, could be over now, maybe a short one, a bounce higher, much longer C, whatever the case might be. But hopefully you get the idea of what I'm meaning here. And two ABCs conjoined by another corrective pattern, which is called a WXY, well, double zigzags, if you're familiar with that term. The whole pattern, two zigzags called a WXY, is basically two ABCs conjoined by a WX axis, is what I wanted to say. Here we go. X over there. And then to complete the pattern, a Y. And where's that label tool? Meaning it could also be dealing with a secondary ABC pattern right now. You see what I mean by either one of these interpretations, either the bullish case or the bearish case, could still be viable. It's just a matter of seeing or knowing how these patterns tend to materialize, how they tend to behave, and knowing which levels should hold and which should be broken to invalidate them or validate them, if that makes sense. So that is also an alternative interpretation of what could be going on. Again, I'll switch to this interpretation if these lows get broken. But like I said, over the short term, potentially moving into 4,116 and a quarter. All right, how are we doing for time there? Cool. NQ looks very similar. It's cool here on the daily that the indicator picked up bearish divergence right at a median line. Pulled back right into a median line, and it's also now bouncing higher. So similar price structure than the ES, really not that much to say differently than the ES over here. So yeah, same thing. I think actually the NQ retraced a little bit deeper than the ES. Get rid of that divergences again and get that high properly. Oops. Redo that. Right about the lows there to there. Yeah. Right at the 61.8, slightly below it. Also in conjunction with that outward sloping median line. And we're now seeing a bounce to the upside. It's not uncommon for price to bounce around these market geometry lines. So year two, we had a previous area we thought support might step in. We had a little bounce, and same thing that happened in the ES. Boom, straight down when Fed Chair Powell spoke at the Jackson Hole Symposium. So potentially moving back into, if you like trading the NQ. Oops, let me just, why is this now lagging again? Let me just get my levels out here. At the lower end, 12,782.5 plus minus, all back into this median line, which is a little bit higher, to about around 12,926, give or take. Again, similar to what I said on the ES, if we start seeing a break, I mean, if the ES is doing it, the NQ is probably going to follow or should follow around about 13,290, give or take. Breaks above here, then that confirms that this potentially was just an ABC. Okay. All right, guys, if you got any questions at the moment, please feel free to ask me there. Let me see on the streaming side of things if I've got any questions coming in. No. And by the way, I'm also in Jason Love's room today, so hello to all you guys in there. Thanks for attending if you're watching me today. We're going to start doing these sessions more regularly. I think starting next week, that is. We had a little meeting yesterday, so I'm quite excited about that. In any case, let's move on to crude oil. All right, Divergence is just off quickly. A quick overview of what I'm seeing on crude oil. We've had these lines, the green ones. I know there are a lot of lines on here, but just bear with me while I explain this if you're new to this channel. Is that I'm saying we potentially have an A wave here, a B wave failed to break this first higher high that we've seen over here, that crazy high. And then we're potentially going to see a C wave to the downside. Now, obviously, this would mean this is corrective, and then price going to potentially move back to new highs. We all don't want that because gas prices, although it's been coming down a little bit, still very, very expensive. And also looking at this price action here, we've had these targets down here at 84.48 and 83.65, which are basically these lows that were set in April and in March this year. Yeah, almost said May. Now that eventually got taken out. So that being said, they were just projections. We didn't trade towards them. It's just been extremely messy. From swing trading perspective, it's been a nightmare trying to trade this market, especially crude oil. But it's still very cool to see how price has been respecting this channel that I've had on my chart for probably more than a year now. And I've started drawing this channel all the way from where prices went negative. And I projected the same channel angle to the upside, which gave us his highs. Price failed to stay above it and moved lower again. Continuously respected them all the way down, although there were areas where these levels were undershot, as we call it. But if you run array, which I don't have it on at the moment, parallel to some of these lows, then you have support, support, support again. Even here, price support, pulled back, broke, resistance, broke, ABC resistance. Down, we had a target over here that was obtained. Now it started following this green pitchfork finally. At the center median line, resistance, and moved down. Now price hasn't reached the lower median line of this green pitchfork just yet. So I think that target is still obtainable, plus minus, and this is now on the October contract, at 79.18ish. That being said, when that will be reached, who knows? Because look at this insane, crazy movements to the downside. Now, knowing how trends tend to start, let's say discounting that this is potentially just an ABC, it could also be that, and I'm hoping this is the case, that this was potentially a 1, sort of an A, a B, ending diagonal C. Forget now that it's labeling me in the wrong ways here. But that we're starting to see some sort of a 5-wave move to the downside. Now, this third wave you would expect always to be very impulsive in nature. That just doesn't happen yet. It's just been up and down, up and down, up and down. Unless this is some sort of first wave of some sort of a leading diagonal that's nearing an end. We could see a move back up and then really start accelerating to the downside. That is how price would need to start behaving. There's the only sort of pattern that I think that fits this sort of behavior that we've seen here, if this was going to be the start of a much deeper move. Some sort of a leading diagonal. 1, 2, 3, 4, and a 5. 1, 2, 3, 4, and a 5. Now it's not going to label that properly because this tool's not the best in the world. I'm still trying to work on a better one. So we'll get that worked on at some stage. But anyway, I hope you understand what I'm saying. Disregard, this is now A, B, C, D, E. Potentially 1, 2, 3, 4, 5. Correct higher and then get a massive, massive move to the downside. Again, difficult market for me to trade unless you day trading this and you've got some other strategies to work on there. But I think we get another break of yesterday's low. We'll potentially move into 79.18 at this lower median line, And we also have that pitchfork that's been working really well, or sorry, pitchfork, the channel, these blue lines that's been running up to the upside, that could also be reached. And that's actually now changed a little bit upwards at around about 77. All right. I mean, crude oil these days can easily move, I don't know, what does it move today? $2,000, but $4,000, you know, $10 a tick. That's pretty crazy. Very volatile. So, yeah. I think if we move back to the upside, just give you some quick levels there, potentially more resistance at these previous lows. It's right there at the moment, but I like looking at market geometry levels. Around about 88.24-ish is where we have this lower median line, or sorry, lower 50% dashed median lines. I call it a mouthful, I know, but price could move into there for resistance. If it breaks above there, we have the channel resistance at 90.95. So it does look like we want to make a move up, but keep in mind on the way up that these might be strong resistance levels. Break below yesterday's low and we could see 79.18, give or take, or 77.08 reached. All right, before we end things off, let me quickly have a look at gold and then we'll call it a day. Cool, gold. Also beautiful bullish, almost said bearish, bullish momentum divergence. Sorry. Whoops. Get rid of all these lines. At this lower red warning line. And we had this low on the 21st of July. We had a strong bounce up. We had this area we were looking at, and we had a rejection from there. Now this area was also a market geometry area, although price moved above it, and previous lows that could potentially, trading 101, as you would probably know, support turning into resistance, right within that zone. Okay, so at this stage we thought that this might have been the end of a move to the downside, and that gold would then make a beautiful strong move to the upside. That has not occurred, which brings into question the overall pattern that I've been talking about for quite some time, is that I think we're actually still correcting in a very large, very nonsensical, no idea what's going on fourth wave. And we tried our best to figure out what this was. I still think this was a combination A wave, another complex combination B wave, and that we would expect a 1, 2, 3, 4, 5 wave movement to the downside, i.e. the whole thing since this highs that was set in August 2020 was some sort of an expanded flat correction. My only worry a while back is that although price broke below these levels, you'll quite often see your C waves break below your A waves and expanded flat, in this case a bearish correction, that it did not travel far enough for my liking. But technically wise, still a valid, beautiful 1, 2, 3, 4, 5 for a C wave that we've seen over there. But price failed within that area and moved strongly downwards. And, you know, for as long as price stays, and it's really almost, when was this? Last week. And again, 2 days ago, came within a fraction of these lows that were set in July. So technically it could also be just an ABC, but then price would really need to start making its way strongly back to the upside. So it really brings that entire corrective idea that I have, that it could have been, or could potentially still be a, or not could be, could have been, you know, it brings into question whether whether that interpretation of a expanded flat is correct or not. It could still be though, but then that means that if this was some 5 waves down, we could see another messy move up, and then it's just it's driving me insane. I know a lot of gold traders that been trading gold for a very long time, and I do know that a lot of them have been absolutely slaughtered during this insane mess that we've seen in gold. And that typically is how fourth waves, if you look at the bigger picture, looks like. They're nonsensical. You've got no idea what's going on. Difficult to fit patterns in here. But this does look corrective. Whether it's over or not, I don't really think so. I think it's just going to continuously messing around on a bigger time frame. So again, potentially probably a better market to trade if you are a day trader. Before I finish things off, you'll see that price moved lower, potentially in a 1, 2, a 3, a 4, a 5-wave movement. And I'm thinking this is actually looking like it's working out. I prepared these lines here. You see this line that I have over here. It's basically running parallel to this green angled median lines that I've had on the chart for quite some time. And if you project it from previous lows or highs, you know, something you visually need to train your eye to see properly, then there's evidence that although price overshot that line, that it's just doing it in the same sort of distances like it used to before, like here, for example. It's just reached that there. I'm wondering if what we're seeing here wasn't just some sort of a correction, and it looks to me a lot currently like this was an A, B, C. Remember, similar to that bearish scenario I've shown you on ES, A, B, C, and then you have a W, X, and another A, B, a potential C, and that could potentially be it, and price heading to new lows. Now, quite often I like swinging a shift pitchfork over the WX axis, which would be that high and this low, and there we have it. Price reached the upper median line once, got rejected, broke below the center median line, couldn't stay below it, moved straight up, made a new high, and is moving downwards again. So I think there is a good possibility that we've seen the end of a W where's that now? X. I'm working on my labeling tool so I can just do this as quick as possible, but now I have to use this drawing tool over here. WXY. Two ABCs joined by a WX axis. A, B, C, X, A, B, C. Potentially. I think this whole pattern would be confirmed if price breaks below the center median line for a second time. Which is currently at 1721-ish, right? Close below there, and I think that confirms this entire pattern. Still enough decent space to the downside to potentially target these previous lows. Now let me just get my snap mode on again. Let me get that level properly. Yeah, 16.99. All right, so that's what I'm seeing in gold, and that concludes today's session. If you've got any questions, like I said, we still have a few minutes left. If not, then we'll call it quits there for today, and I'll be back on Monday. And from Monday onwards, I believe I'll be permanently in Jason's room, or from Wednesday. We'll still have to decide when that's going to happen. Okay. See no questions coming in. All right, guys, thanks very much for attending. I'm going to start locking things down here and get out of the room and go for a nice afternoon beer. It's weekend this time. Nearly, what, 3:15 my time. As always, I'll be back on Monday again, same time. And I hope all of you have a fantastic rest of your weekend. So thanks very much again for watching, and take care, and goodbye that side. Cheers for now.